Good afternoon, everyone. It is Friday, July 25th, 2025, and we should be preparing for major volatility in the markets next week with the FOMC, Apple earnings, and even jobs data. Let's get into it here. But first, if you give the video a thumbs up, helps out the channel very much. Consider commenting, subscribing, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So we've had a low volume, low volatility melt up for quite a while. We've been talking about this, and we've been looking for, obviously the big rally that we've been getting, and there we are at the 6,400 all round number, and call wall sitting up there. We got to 63.95 a few minutes ago, and we're just kind of sitting just beneath that right now. And this is obviously a call wall that's been, kind of pretty well telegraphed, but we are seeing some signs here already going into next week that we should obviously prepare for volatility. Just based on being into that call wall in general, it can get defended. And we've seen it get defended before, very much like in December where we hit that 61 handle. Very, very inconspicuous pullback. We had a very, very deep slice on the Fed. So volatility it's compressed right now, but this can start to open up pretty soon. So we have a lot going on. Now, I also want to mention here, though, that's not a license to just short the market. In fact, again, we talked about this yesterday, but, fund manager exposure going down. I'm very interested to see what the COTs look like tonight. I may cover that in the blog on carnivoretrades.com, market insights. Check that out if you want to. I'll do a quick little excerpt on that. But fund managers reducing positions. So, we don't have euphoria here. Despite what the chart looks like, we don't have euphoria in sentiment either. So there are reasons, there are ways that we can go higher. We've talked about Apple ad nauseum. Each time call sellers come in, and they did a good job this week, I'll give it to them. They held it below 215, but each time they come in, it says higher lows equal highs. We have a lot of stocks that look like this. The Russell here, it got sold off earlier, and I can tell you how many comments I've gotten on here and in on Twitter, like, oh, the Russell is weak. All right, how many moving averages is it above? All of them. It's even above the 8 and 12 EMAs. You just kind of had like a dip by today and just another higher low here, another higher low setup. So, is it lagging right now? Yeah, it's lagging, but these things do, they can break out and go higher. And if that happens, that's going to be responsible for us pushing higher towards a number like, let's just say 6420, or maybe 6500 for next Friday. This is new. This was not really here that long ago. These levels are coming in. So we're seeing hedges past 6400 here in the near term. And that may come as a surprise. Just like this entire move in general is, and this one here for Monday, 64.20. So again, things that can get bananas here, and if you thought it was already, it can get even crazier. So yes, we do have there is risk up here. Not what am I saying to go long? Absolutely not. I still maintain that it's a good idea to start like harvesting cash. But, these like blow off tops, this is a blow off move here for sure. And they can go higher and faster than you think. In fact, that's when the most amount of gains are usually made before they're given back. But yeah, that's kind of where we're at here. So again, until we get, I keep saying it every day, but until we get high volume selling, this can go higher. I remember everyone was talking about, right here, oh, it's a tail, it's a shooting star, there's no volume behind it. By the way, it was a new all-time closing high that day. Oh, this isn't engulfing. Well, first of all, it's not, because you didn't take out the low. Yeah, you had a little uptick in volume, but this is distribution, right? That's volume, right? Once you see that break there with a noticeable clean uptick in volume, that's your signal. We don't have that right now. It can go higher, bottom line. But next week should be fun. I'm predicting a tweet storm on Wednesday because the Fed is, the fiasco yesterday was quite amusing for the memes. That's just absolute quality material. in that department. But right now, the 2-year yield is putting in higher lows here. I mean, it's been doing that since April. So the Fed does not need to cut. And even if they do, I could see 25 basis points. Trump wants 300. So he's going to, I mean, he's going to be upset. And that should be interesting. Maybe that destabilizes the market. He says he's not gonna fire him. Well, maybe he crashes out, and maybe he does. I don't know. So there's definitely a risk here. And right now, the thing I don't like about it is this type of movement here, where it's taking, we'll just say 63.70 to 10 points, right? Look at how long it takes to move 10 points here now. Why I don't like that is when volatility opens up, it can wipe out like days worth of action in seconds, and at a moment's notice, right? You're kind of in a false sense of security, right? So we got to be careful up here. But I think if you're smart and you're buying quality names, you're okay. But yeah, the air is definitely getting thin. So volatility is definitely attractive at that 15 handle, maybe a little bit below that, but we're definitely in the nosebleeds here. Doesn't mean I can't go up a little bit more. And again, like I said, there's hedges for it. We could get trade news that pushes us up. We got Apple earnings, we got jobs, and those are volatility events that have a volatility attached to them. And if nothing big enough happens, that just pushes vol even lower. So that's where we're at right now. But I would say just be an abundance of caution here. QQQ, new all-time closing high. Dow got close, and this is one of those times where this is trading. So we had this wedge here in YM, and I was looking at it this morning. We got in, and I said specifically to everybody, watch for a trap below this trend line. And you know what? It took it down, and they got my stop anyway. And then it went back up. So I was looking for a Friday rally in the Dow. We got it. It's all right. We got the Russell. We picked up the Russell at the lows, and we're riding that right now with a nice win. So it worked out. But yeah, that's trading sometimes. Calling it pretty much the exact move. Figured this trap would happen, but they got the stop by a couple points, like it usually works. But yeah, nonetheless, Dow here, just off all-time highs. I thought they might try to really pump it because they like to pump the Dow when it gets this close to all-time highs. They like to pump it into Friday and get that all-time high close, but it doesn't look like we're going to get there. Yeah, we got 15 minutes. There's no way we're getting there. So, but nonetheless, trend is up. Market's acting well. IWM has to gap above 225 in order to keep going, or in order to break that out. I think they're just going to have to gap it. Semis, nothing doing here. Cloud, new all-time highs. Palantir, people keep fighting it. It keeps going higher. Microsoft, people keep fighting it. It keeps going higher. This gap was a power gap, and it hasn't closed below the 20 moving average since April 24th. It hasn't even touched the 20. Oh, sorry. It touched it once there. So cloud strong, transports strong here, curling back up, nice inside kind of pullback pattern. We talked about rates. PLT is firming up. I'll say that. ZB, it's got a little, come off the lows of the higher low there. So that might rally a little bit next week. I still don't love bonds long term, but short term it's holding up. Housing had a good week here. XHB up 81 cents today, and again, pop, inside pattern, pop again above the 200 moving average. First time it's closed the week above that since gotta go back to the beginning of the year. We got our IYR dip today, but it's flat right now. Weekly breakout, right? So don't worry about the daily, just look at the weekly. XLF, new all-time closing high. That's not bearish, in case you were wondering. KRE, this was why the Russell was weak this morning. But, came right back. And, oh, by the way, we called out the exact low. I said 61 was going to be your put wall. And that was it. I mean, it sliced right through it and then boom, right back up. So it's up $1 from there. These dealer levels are no joke, I'm telling you. We see things that no one else is looking at. Everybody else is obsessed with gamma exposure. It's important. It's probably the most important thing, but you can get absolutely creamed if you don't know what else to look for. But yeah, down 21 cents. 64 is still resistance. Broker dealers new all-time closing high. Well, that's for news. Who would have thought that? Or at least on the weekly. Oh, yeah, I think it's just on the weekly, right? Oh no, maybe it's not, because that was last Friday. Either way, who cares? Uh, oil down 88 cents. Yeah, who cares about oil too? Nothing's changed. XLE inside day. XOP and OIH has bucked the trend a little bit lately. Weekly close above 250, so that's nice. Dollar bouncing again today. It needs a macro trigger to go if it wants to break higher. You could make a case you have a little possible inverse head and shoulder here. It hasn't triggered yet though, but we'll just keep it on the back burner. We got plenty of macro triggers next week. Jobs, Fed. I think we have the BOJ too and ECB, if I'm not mistaken, possibly. But yeah, so it needs a trigger though. There's shorts in it, but it needs a trigger. Gold backed off today. It did come off the lows, and we're glad we got out of that the other day. And again, our little dashboard told us to get out of this and not go back to the well too many times. Silver down here too, down 2.25, but trend is still up. There's no real damage here. It's just a dramatic red day. That's all until it actually does damage. Platinum maybe losing a little bit of energy here, but again, same thing. The trend is still up. Just be careful of these things with platinum and palladium. Like when they decide the top is in, they just go down as quickly as they went up. So just be careful with them. But palladium backing off, copper still holding up really well, really well. And then Bitcoin here, the end of the Bitcoin bull market happened this morning, and then it bounced off the lows like it always does. So, it got a little bid here. Overall, you're still inside of this green, which is still inside of this kind of like flag-ish structure. We could probably edit this a little bit even. Let's go into a 4-hour. So I just kind of like have this arbitrarily drawn in here. But you get the idea. So it's still inside of that for the most part. And I don't see any issues. Now it is maybe, now next week, the dealer kind of data that we're looking at on IBIT is a little weaker. It's not bearish, I wouldn't say, but it's definitely not like as bullish as it has been. And you got ETH here, just flagging right now. This is okay for now. But it needs to let that 20 MA catch up, and then it can try to break really above this trend line. But the other thing I don't like is that this just kind of like squeezed up with this was gamma squeezing for sure. So it's not like it built any support on the way up. That would be the only issue there. Outside of that, there's no other technical problems. So market backing off the call wall here. It's 351, so we're getting ready to close. And just be careful next week. We'll definitely be here to cover it. And I'm definitely interested to see what the COTs say tonight. I swear, if they added their shorts again, I don't know what to tell you guys, man. So anyways, guys, I'll wrap it up here. Again, you guys take care. Have a great weekend. Come find me on carnivoretrades.com, and I'll see you guys all next week.